I'm Jagendra Rana. Good morning. So, the topic of the day is AI driven cyber attacks on insurers. AI driven cyber attacks on insurers. Insurers are tying up with agencies that act as intermediaries to interact with the hackers or threat actors. These agencies help in negotiating with the hackers when they don't release the key after stealing data. So, at least 5 to 10 cases involving large sums of money had been settled through such negotiations in a little over a year. A report from Palo Alto Networks highlights the escalating cybersecurity risks faced by organizations in the critical sectors like financial services, insurance, and healthcare. So, the 2024 unit 42 attack surface threat report reveals that these industries are increasingly vulnerable to AI-driven cyber attacks as their rapidly expanding digital footprints introduce over 300 new services monthly, often leading to misconfiguration and exposures. So the study emphasizes the urgent need for continuous asset discovery and monitoring to secure IT infrastructure against evolving threats. As business continues to expand their digital footprints, the task of tracking and protecting all assets becomes increasingly difficult. Many organizations struggle to inventory their internet-facing applications, leaving them exposed to cyber threats that often begin with the exploitation of software vulnerabilities. So, what are the key findings? The constantly evolving cyber attacks, on average, an organization's attack surface introduces over 300 new services every month. So, accounting for nearly 32% of new high or critical cloud exposures. So, this rapid growth of new services without central oversight inevitably leads to misconfiguration and exposures, resulting in higher chances of a breach. So there is increased risk from lateral movement and data exfiltration. Because the organizations experienced 73% of high risk exposures within IT and networking infrastructure, business operations, applications, and remote access services, which can be exploited for lateral movement and data exploitation. So, critical IT security infrastructure exposure is required. Over 25% of exposures involve critical IT and networking infrastructure, opening doors to opportunistic attacks. These include vulnerabilities in application, layer protocols, and internet accessible administrative login pages of routers, firewalls, VPNs, and other core networking and security appliances. So, remote access services and business operations applications also constitute a significant portion of exposures, with each comprising over 23% of attacks surface exposures. over 23% of attack surface exposures. Now, high vulnerability in key industries is there because the media and entertainment, the industry experienced the highest rate of new services added, exceeding 7,000 per month. Telecommunications, insurance, pharma, and life sciences. These industries saw substantial increases with over 1,000 new services added to their attack surfaces. So critical industries are there like financial services, healthcare and manufacturing saw their attack surfaces. Add over 200 new services every month. The report also highlights the need for organizations to adopt AI-driven tools like Cortex Expense, which provides continuous asset discovery and inventory. So this capability is essential for maintaining complete visibility into the attack surface and reducing security risk. As digital transformation and cloud adoption accelerate, the attack surface becomes more dynamic and challenging to secure, heightening the risk of AI-driven attacks that can scan billions of IP addresses in minutes to exploit vulnerabilities. So with nearly half of exposures linked to remote access services and core networking infrastructures and 23% to business operations applications, maintaining real-time visibility and monitoring is crucial. So leveraging AI-driven solutions for continuous asset discovery and inventory is essential to ensure comprehensive visibility and mitigate security risk. But to secure defense, to secure attack surfaces effectively, maintaining persistent and comprehensive visibility across all assets is essential for identifying and responding to risks such as high-profile vulnerabilities. Monitoring for unsanctioned services or shadow IT is critical to differentiate between known and unknown assets. So prioritizing remediation or remediation efforts on high variety vulnerability, especially those that are internet exposed, is also crucial. Moreover, organizations should implement processes to address critical exposure risk in real time, optimize cloud configurations, and enforce secure data handling practices. So finally, staying informed about emerging threats and regularity, reassessing the organization's attack surface are key strategies to mitigate risk. Private insurers such as HDFC Ergo, General Insurance, and Bajaj Allianz General Insurance are going the extra mile and negotiating with cyber attackers to tackle claims owing to ransomware demands. As India becomes one of the most targeted countries for cyber attacks globally, this is in addition to tweaking their cyber insurance products, reworking covenants and tightening agreements with the clients as cyber insurance becomes a big business stream for them. The insurers are tying up with agencies that act as intermediators to interact with hackers or threat actors. These agencies help in negotiating with the hackers when they don't release the key after stealing data. At least 5 to 10 cases involving large sums of money had been settled through such negotiations in a little over a year. The primary focus is to determine if the threat actors are indeed responsible for the attack, and then they try to lower the ransom payment. So this also helps to buy more time to make any payment. Many ransomware negotiations service providers offer ransomware remediation, PR assistance, and post-attack monitoring services. Some enable detections and response services or products to prevent future attacks. It may be difficult to get an official number on such negotiations, but said 5 to 10 such deals might have taken place in the last more than 1 year. So over the last 1 or 2 years, the capacity of reinsurers has reduced owing to huge overseas claims, which is making them look at reducing exposures to cyber insurance. Even if a reinsurer gets hit by 2 to 4 claims worth $10 million over approximately 2 years period, it can be a big hit on their businesses and financials. So while there is a demand, the supply side is a problem. So cyber criminals deliberately make data breach details public on the dark web as a pressure building tactics to jack up the sale price during negotiations. In most negotiations, the attacker is able to provide enough evidence of kidnapping X amount of data to the organizations. Once they are convinced that critical data has been stolen, companies assess the business impact to decide whether to pay the ransom or not. So recalling an incident when a company received a ransom note just days before it was preparing to list on the stock exchanges. New development of such nature at a critical time like an IPO could have destroyed the firm's entire valuation. So the only option was to pay. So this has also pushed for more stringent terms and agreements for cyber insurance. Cyber is now being talked about across bedrooms or boardrooms. Cyber is now being talked about across boardrooms. As the nature of cyber threats continues to evolve, insurance policies are adapting to cover emerging risks, and collaborations between insurers and cybersecurity firms are on the rise to provide proactive risk management solutions. So cyber insurance premiums have surged 50 to 60% in the past year, as reinsurance rates have gone up amid a global increase in cyber attacks and ransomware incidents. So the corporate cyber insurance market in India is worth around rupees 600 crore today. The corporate cyber insurance market in India is worth around rupees 600 crore today, up from around rupees 400 crore just 6 months ago. So as of today, HDFC ERGO has recorded a 25% to 30% rise in new corporate cyber policy numbers. So in the new covenants, insurers are putting limits in percentage terms on the claims that can be availed in case of such ransomware cases. So with increasing instances of payouts, premiums are increasing and such companies are seeing an increase in deductibles. So besides where earlier only large companies, especially in the IT, ITES and BFSI sectors were asking for a cyber insurance cover, now other sectors such as manufacturing and pharma, including mid-sized companies, are also getting such a cover. Although a policy for smaller companies also run the risk of weak systems and tech infrastructure, which necessitates variations in premiums. So cyber insurance policies have been evolving, offering more customized policies, taking into account specific risks and compliance requirements. So we also have a 3-4 page checklist questionnaire to understand the company threatware, how strong their firewalls are, their security measures, etc. Depending on this, the premium is priced. Thank you very much.